Good afternoon, traders. This is Chris Buss with your Market on Close report for Wednesday, October 28th. Okay, let's figure out where we're at. What I've decided to do is zoom out to the daily charts, kind of get a look. Sometimes we get wrapped up in the shorter time frames for active traders, but I want to zoom out to the daily on the indexes and kind of get a gauge of where we stand at this point. So on the SPY daily, we had this well-established trading range, $20 range from 320 to 340. We broke out, came back and back tested, and we had talked about how critical a spot this was, that as long as this 341.50 had held, that it was a simple back test of the breakout. But if it broke below, our technical target would be the bottom of the box. And as you can see, that has happened very quickly. We lost the 50 today. Yesterday it had held, and today it let go. And to make matters a little bit worse, we've crossed below the midpoint of the box at 330, which oftentimes the midpoint of a range will act as support, and you can actually see that here on the volume over price bars. In a normal circumstance, you would have thought that that would have held. Just too much downside momentum. It blew right through it. Really didn't even hesitate at all today. So as we go forward, if we were to reclaim 330, that would be a positive technical event. But as it stands, that's going to be significant resistance now, because this should have been significant support, and it wasn't. So that's going to be resistance on the way back up, this 330, that if it can clear, that would be very bullish. But if it gets rejected there, then the target will remain this 320 at the bottom of the box, which lines up with the September lows. So that will be a point that we're really going to have to look at, as we go forward, those two reference points. Zooming down to the 2 hour, we came down, we filled this gap down here to 328.25, blew right through it, and the momentum, specifically right at the end of the day, it really let go and punched through this 327 level and did an overshoot down to 326. I dropped in the fibs for you. You can see that this 38% level is 331, which would be back at the top of this prior gap support area. And then the 50% lines up perfectly with the bottom of the opening gap, or the high of the day, both at the same spot right here at 333. Obviously, we are oversold on the 2 hour. Momentum has taken a sharp dive lower, obviously in bearish territory. So tomorrow, most likely, we'll get some type of a bounce. How high that will take us, hard to tell. We've got the big mega cap earnings tomorrow afternoon. So regardless of what happens tomorrow, whether we bounce to the 38%, 50%, or just kind of oscillate down here at the lows, a lot going forward will be the market reaction to those mega cap earnings, which has such a high weighting in the in both the QQQ and the SPY. Looking at the 30-minute chart, the same fibs are here. You get a clearer look at it. Just technically speaking, after the drop, after the first hour of trading, we literally spent the rest of the day in a tight flat bear flag here between 329.50 and 328. You know, this was some tough trading. I mean, to be honest with you, you had to be either real sharp, real quick, or both to do anything in this area. I took a couple of paper cuts and basically threw in the towel, and then had marked the breakout zone and the breakdown zone as places to possibly take trades. And just, I mean, nothing materialized. Couple false breakdowns, couple false breakouts. That was really tough trading in there. And, you know, after a couple tries, honestly, I gave up. And then in the final half hour, we had a touch of the top, and then it just let go. I mean, I think you almost had to be lucky right there to get that entry on the final half hour. And, you know, I just watched it, to be honest with you. I was a little surprised, but, you know, given the day, it was, you know, in the course of business, just a liquidation bar at the end of the day, and came down here to this 326 level. So tomorrow we'll look for a potential bounce up here to this 332 level where the fibs align, and we'll see what we get. QQQ daily, same thing. $20 range, breakout, back test, and fail. And we lost the 50 today. I didn't mention it on the SPY, but we're well below the 50 there as well. Here, 270 marks the midpoint of the range. So technically speaking, here's that high volume overpriced bar. We would want to see 270 hold, or else then that opens up, if that were to fail, that would open up the bottom half of the range and the potential fulfillment of the bottom of the box target back at the September lows down here at real close to 260. So if that holds and the mega cap tech does well, then there's a potential bounce back up towards 280. There may be some resistance here at the 50, but there's the potential for a bounce back up towards 280. We'll have to wait and see. A lot of lines here, a lot of congestion. That'll be cleaned up tomorrow because we filled two gaps today. We filled this first gap, and then we filled this other gap. If you remember, this morning we were talking about 274 as a potential support area, and it did hold for several hours, and then once it failed here, it went straight down to fill that gap down to 271.50, and that would have been a nice trade to make. But again, a lot of that was in the last few minutes of the day. Right here, you can see it traded right on that line for most of the day after the first hour. Again, a lot of choppy trading in here. I didn't box it in, but you can see the box was there. And then after excuse me, this reach up to 275, then just a liquidation bar that went ahead and filled that gap. So technically speaking, we got these gaps filled, and now tomorrow with the fibs dropped in, you can see that there could be a potential bounce back up here to 275 would be technical resistance. 276 lines up well with the 38% fib, and then here's a big confluence area at 277.50 where the fibs and this this swing low line up, and that would be an area where I would expect a definite reaction there. If it made it that far, that would be a place where you could try an objective short against this prior low, the fib technical resistance and all of that. But you can see we've overshot the channel. That doesn't mean we can't go lower, but it does mean that, you know, with this big move, you'd expect some type of a bounce tomorrow. And if we didn't get it, that would be pretty bearish. I mean, we're very oversold on the longer time frames as well as, you know, this 30-minute time frame. So I would expect some type of a bounce tomorrow. If it stays real weak and just oscillates down here, probably just waiting for the big tech earnings to come out, and then we'll really know what the lay of the land is. IWM daily chart just lost the 50 today. We had this 155 marked, got the big gap down, and then some follow through to that. Now the technical target here is this 150 level, and then you can see, because of this ramp that we got on the, you know, cyclical reflation head fake, the September low is still quite far away, still $8 or $10 away down here at 145. So we'd have to cut through this support level at 150. We'd have to punch through the 200 to get down here. So there's work to do on the downside, definitely, with some key support levels in the in between here and there. I would expect a bounce here somewhere if we made our way down this far. You can see that unlike the SPY and the QQQ, although PPO has put in a bear cross here, you can see it's still above the zero line. So from a momentum standpoint, it hasn't turned completely bearish. RSI is in a worse posture. It has broken below 50. So there's still room to the downside, but there's also room for this to come down to the zero line and turn up. That would happen if we got good bounces here, either off 150 or the 200 right here. So we'll look for that in the days ahead. 2-hour time frame, I've dropped in the fibs off of this swing high here at 160. That was our key level. You can see that this 38% level lines up really well with the bottom of this gap, and that's where you could see a potential bounce. I don't have this actually marked in accurately. You may see a reaction here at around 154.50 as well. That was a line that went way back, and that was a level right here where you might see some resistance on the way up from any bounce that we get tomorrow. And eventually, if we lose this 50% fib level at 153 at the bottom of the gap, then that's going to open up downside towards this 150 and the 618 retracement level. That would be your technical target on any kind of break. So if downside persists, we may see a bounce and then a reacceleration to the downside. So this 38% bounce target right here at 155.50, that would be an objective short area. And then if we broke above, that would be also an objective long, and look for a gap fill if things get all of a sudden really, really bullish. 30-minute chart, not a lot new to see here. Just have the fibs expanded. You can see that once the gap broke, we basically spent the rest of the day inside the gap and then basically filled it at the end of the day. I think we fell a penny or two shy, but I'm considering this filled. And now tomorrow, 153 is support. And then, as we discussed, here are the resistance levels here. Back at the top of the prior gap at 154.50. And then if it can push through up to 155.50, where this big opening gap will reside. Moving on to the FAANG names. You know, these technicals, they work, man. We had talked about at midday, at the midday update, that this uptrend line had been holding, and that if it broke, then it would be a gap fill, and that's exactly what happened. This looks like a simple trade. You know, get short and then just stay short the rest of the day. If you did that, kudos to you. If you break it down on shorter time frames, there was a lot of chop in here. And then this final bar was, you know, gave a head fake higher and then, you know, let go with the rest of the market. So on this time frame, it looks like the simplest thing in the world, but it was a lot tougher than that. I didn't try to trade it, but I was watching it all day. Not a simple trade. It was there was a lot of chop today. Apple, to me, was one of the simpler trades today, and I'll tell you why. We had identified this 115 as a key level. Bulls okay above, bears in charge below. That was your bull bear pivot. Gave you an entry point because this gap down popped back above 115, and then when it dropped below, you had your entry point, and then our target was 113, which was achieved, and then it spent the rest of the day below. And what's important about that is it didn't really give you any head fakes to, you know, there wasn't any big fake move up. So there was good reason to either stay short or get short on the break of 113, which was our key support level. And then if you just held your ground, you got that move at the end of the day. So technically, this was a much easier trade than some of the other ones that we're going to take a look at. So tomorrow, obviously Apple at the end of the day on earnings really stopped here in no man's land at 111. If you're not in, I don't think you can really do anything tomorrow unless you got to move down to 110. And then I would, I don't go through earnings, so that's a decision up to you whether you want to, you know, participate in earnings. That's not what I do typically. So, but if you got down to 110, then you've got an objective long, you know, during the day. I would kind of expect this to come up to 113, but we'll see. But anyhow, if you got that trade, kudos to you. That was a great trade. You got $4 out of it, which is a very nice day. Tesla. Would have been a hard trade to make today. Reason being, it gapped down below our 420, so you didn't really have an objective entry. If you took a shot here at 414 or whatever the high was, you got your move down to 410, but then it held that support level the whole day until the final bar, which it dropped below. Now Tesla doesn't have any earnings. Earnings have passed, so from a technical standpoint, you can be short anything below 410, because now I have to draw it in, but on the daily chart, the target is 390 on the downside. So if we see follow through in Tesla, that would be your target, actually down here towards the bottom of this channel. And then any recovery of 410, you can look to 420 if things get bullish, or there's a bounce in the market or whatever. But this sets up pretty nice for tomorrow. If you got a kickback to 410 that failed, you can stay short or get long at 410. But 410, you can tell that this is an important pivot. All these holds back here, and then finally letting go. So that's an important level. Microsoft. This was a good trade in the morning. You had to be quick, but you got to reach back up to 209, 209.50, and then it let go, hit our technical target of 204.50. Then it held the rest of the day until the final bar. And if you covered here, that's fine. You got your $3 or $4, and then if you had held, obviously all the better. Came down to this 202 technical target that we had. Excuse me. Come on. Sorry, guys. Sorry about that. Dog out of control. Anyhow, reached our technical target here at 202. Now tomorrow, any bounce back up towards 204.50, it's a short. And if it breaks above, then you can look for higher levels here on any kind of a bounce tomorrow. Any break below is an immediate short, and that would look for a target down at around 197, which was the September low. Amazon. Again, this sets up like Apple did. One of the easier trades if you were focused on it. We had talked about 32.50 as the bull bear pivot, gapped down, but then reached above, and then when it fell back below, that was your entry point, and you got the $50 that we had talked about in the morning. It broke below 3,200, which was the next level, and gave no real shakeout candles to shake you out of your position. And if you held it, then you were able to capture the entire move, which was 32.50 down to 31.60. So you got $90. That was a great day, and congratulations to you if you got that. Like I said, the entry was definitely there, and then the follow through. Now tomorrow, this 31.50 becomes important. No trade to make here in the middle of the range. If there's a kickback, 3,200 again becomes the pivot point. Take it long above, reinitiate your short below if it has trouble, and then back down towards 31.50. Google, straight down the whole day. If you got it, great. You had no reason to get out. Actually, at noontime, we talked about the break into the gap. You didn't get that till the final bar, but if you had gotten short anytime during the day, you had no reason to get out really, unless you just wanted to cover here at the top of the gap, which would have been fine. That was a perfectly good trade to make. Tomorrow, as far as bounces go, back up to 1540. That aligns well with this 38%. That would be an objective short if you got that, and then back down, and then with your stop just above, or potential place to get long there on a break above. Also in the morning, if you know there's no gap up and this 1505 holds, you can stay long against today's low, and then take it long and see if you can get that bounce back up to 1540. That would be a nice trade as well. Netflix, nothing to see here really. It had made a fake breakout. We talked about that at the noon hour, and then it came back into the range. Not a whole lot to do there. I think this is going to be range bound until you either get the breakout or the breakdown. You can play the range, you know, if you care to. But there was some tough, you know, if you're trying to trade this intraday, there wasn't a lot to make there. XLK, because it's the most important sector out there, we lost this 112 area today, well below the 50 EMA. Now we're looking at the September lows as a target. If we recapture 112 tomorrow, that could be a place where you could take it long if you care to. Basically, tomorrow's going to be, you know, waiting on the FAANG, the big four tomorrow afternoon. So this is going to be very dependent on how those react. XLI at the September lows, this has got to hold here, or really the target becomes 71 down at this high volume over price bar with the void in between. You've got the 200 here, but with the void, if this breaks and the market, you know, continues down, I would expect this 71 to be achieved. So that is a nice setup for anybody that wants to swing XLI. You know, if you got a little kickback to 76 and a quarter, 76 and a half, that would be a place to initiate a short if you want, and then back down. But any break of this 75 in the September low is going to target this 71 level. I thought I'd show XLY, didn't show that this morning. Lost the 50 today, so now it's got targeted the September low. Of course, Amazon is 25% of this index, so everything's going to depend on how that reacts to that tomorrow. If it's poor, then, you know, Friday morning we'll be looking at 142.50. If it does well, you probably get a kickback towards 150, where, you know, we can decide whether we want to initiate a short there and down, or if it's going to break out above if everything gets bullish again. I don't see that happening before the election, but we'll wait and see. Not a lot to report since the noon hour on gold. Really didn't do anything. In no man's land, probably coming down to this low here at 174, and then we'll see if it breaks that and comes down to 171. I am bullish gold long term, but it has not been working recently. You know, ever since back here, it's been in consolidation, and now it's actually broken down. And, you know, the point to make here, the traditional safe havens just have not worked. I mean, bonds didn't really do a lot today. You would have expected them to do a moonshot. They really didn't do that. You know, gold was down, Bitcoin was down, everything was down. This was a classic go to cash kind of day. I mean, everything. Defensives, utilities, I mean, everything liquidate. Tech was worse than most, but everything liquidated, and including gold and you know, silver, same thing. Get out. Down here in the middle of the range, targeting this 2050, which should be good support, but if 2050 breaks, you got a massive air pocket here of $3. We would definitely want to capture that if it were to break. So this will be an important level, 2050, going forward. We had talked about GDX at the noon hour, you know, breaking this 37 level. Now it's all about the 200 here at 35.50, and if that breaks, then we're looking at much lower levels, potentially 32, 31 down here, and I think that would be a remarkable buy, I would think. Certainly would want to give it a shot there, and if it didn't hold, then I don't know what to tell you. It would be going way down from there. I wanted to show this to you. So many charts for you technicians out there, aspiring chartists. This whole idea of boxes and fake breakout, re-entering the range, the target is the bottom of the range. This is just one example. There's a bunch of them out there. We even see it in SPY, and to an extent QQQ is well on its way. It's remarkable. You wouldn't think that this little move back in here would result in a $10 move in just a few days on this particular stock. But just like on SPY, I mean, just a couple days ago we were at 341.50, and now we're pushing, you know, the potential of going to 320 in a heartbeat. We're already at 326, so that's you know, $15 lower from where we were just a couple days ago. It's that is something really for your, you know, your technical playbook going forward down the road. When you have these well-defined ranges and you get a breakout that fails, boom. I mean, that is an objective, as short as you ever want to get. And if you get stopped out, that's fine, but a lot of times you are going to get that fast move down to the bottom of the box, and that's something to look for in your technical playbook. It works remarkably well and is quite consistent. I want to talk about the VIX a little bit. I had posted this a week ago, maybe on the weekend video, I can't remember when, but we were talking about this 2750 would open the door to 35. Well, we got that and then some. We got a push on Monday, backed off a little bit yesterday, and then got the explosion today, closing up above 40, with now resistance at 44. Who knows if it makes it or if it breaks out, but we did get that technical breakout. And if you were on your toes and you like to trade volatility, that was a great long there. We had a well-defined resistance level that broke out, and if you took that long, that was a great trade. What I'm interested now is a VIX short for after the election looking out in time. I don't want to get too cute and, do something for next Friday. Saw a lot of VIX puts being bought by the big boys for out in December for literally a VIX collapse coming back after the election, after a lot of this turbulence subsides. The only monkey wrench in that is some kind of massive, election controversy, riots in the streets. God knows what could happen. But I think the base case is the election is resolved relatively quickly, and vol just comes out after the election, into December. I don't think we got to play it too cute, 2 weeks out kind of thing. I think we can buy a put out in time in early December, mid-December, and I think that would be a trade that works. We'll have to see how the next couple of days play out. I think the time to do that is depending on how the FAANG trades work or the reaction to them. If, they all do moonshots, vol's going to come out tomorrow and into Friday. Actually Friday, because earnings aren't until tomorrow night. So that reaction would be on Friday. But I think in front of the election, I think vol is going to hold in there. And then after the election is when you're going to see volatility come out of the market. And speaking of the election, I have to say that the environment here has, I'm not saying thrown me off center, but it does have me concerned. If the breakdown that we saw on Monday back into the gap, or not back into the gap, back into the range, had happened on a run-of-the-mill, middle of the week, middle of the summer, no event risk in front of it, you would have seen me piling into puts like nobody's business. I've been real cautious here. Just not sure of that election risk. It's easy in hindsight to say, you could have, just shorted everything and been a hero. I've gone into defensive tactical mode, as I've communicated in my other videos, trying to pick off, pick off trades here and there, but not having a lot of duration that would go beyond the election, because I just don't know. We could do a moonshot, or COVID could be in control. I'm not really sure exactly the root cause of the volatility or how to play it. That's one reason I didn't go into the reflation trade, full bore the other way. The other day we had nice breakouts in regional banks that I pointed out. We had, all the back to normal trades ripping, all the junk, value trades, cruise lines, airlines, trucking, everything, hotels, all that stuff ripping. And you know what? There was part of me that said, God, I really want to get in these trades, but we got an election, right around the corner. We've had so many head fakes in value over the summer. It's, been ridiculous. They've all failed. And I was just hesitant in that. And I've been I've been most defensive that I've been in a long time as far as taking directional trades. And I just wanted to give you, insight on that. It's easy to, look back. You should have done this, you should have done that. And if you have done that and it's worked out well, then congratulations to you. I just have not felt secure in taking, duration trades, either on the long side, on the value trade, or the, piling in short right in front of the election. So I'm holding my own on the, the short-term intraday trades, keeping my head above water. I hope you're doing the same or even better. And I'm going to stay in that mode till the election. And then I think that will be a big relief for everybody, not just me. I think the market in general, there'll be a big sigh of relief. There may be a relief rally, and then we'll find out what everybody wants to do. If COVID is still in control, or the market decides that, valuations have gotten ridiculous and, tech continues to sell off, I think we'll know. And I think we'll be able to lean on our technicals and our intuition a lot more securely than we have in the last week or so, as the election draws near and there's just so much turbulence around. So I really look forward to that. I hope you do too. I think the whole market will be looking forward to that in general as well. And that sets the stage for, a potential double bottom at the September lows. We'll look for divergence there. And if that September low breaks, then we got a whole new ball game, because that's a very key level. We'll have broken the bottom of the box, and, leaning on our technicals, if we break the September lows, then our technical targets are $20 lower, just like they were on the upside on the breakout. So anyhow, that's a little insight into my thinking. I hope it's helpful. I know we haven't had a lot of directional trades, in the last few days. We got stopped out of a bunch. So better to take a quick loss than to hold on and hope. And, in hindsight, that was the right move to get out of some of those trades, or all of them actually. So anyways, I hope you find it helpful. I hope you've been having good luck trading both the intraday, and if you've been taking some of these longer trades and you've been right, congratulations to you. Let's wrap it up there. Long video, but it was an important day in the markets, and we've got a few important days ahead with the Big Four reporting tomorrow after the bell. If you're new to the channel, if you like the content, please subscribe and hit that alarm bell to get notified of new content. Had 3 videos today that I hope were helpful. Had one in the morning that had a lot of setups, so you can participate in that in the days and weeks ahead. Would love to have you. Links over in the show notes to the blog, where you'll find a lot of good and helpful articles for you aspiring traders out there, and also a link to subscribe to my content, where you'll get all this information emailed directly to you each and every time I publish new content. Would love to have you join the team, and if you do that, you'll get an invite link to our trading room, where you'll find a lot of aspiring traders just like yourself, trying to get better, working with each other, supporting each other. Got a nice community going, and we'd love to have you join us. So until we talk tomorrow bright and early, this has been Chris Buss with Traders Profit Compass. Talk to you next time.